Good evening. I'm extremely happy to welcome you to the presentation of Claranova's annual results. We are especially proud tonight because this is our first session in English. So let's go directly to the point and introduce Pierre Cesarini, who is the CEO and President of Claranova. Pierre, the floor is yours.
Thank you. Hello, thank you very much for attending this session. I'm actually very sorry not to be able to be physically with you today, but I hope we can do it next time. I am going to present with Jean-Yves our fiscal year results starting in July 2019 to June 2020. We are going to stick to about 30 minutes of a formal presentation with a few PowerPoint slides, and then we'll be able to have 30 minutes of Q&A. So if you want to send us your questions, feel free to do so. You should have an SMS number to be able to send these questions. To start, I wanted to share with you a few points on Claranova. I think Claranova is asserting itself even more this year as a global digital player. Global player with a revenue over 400 million euro this year, which is thought to be a fairly decent critical size, especially for a company with 5 years of existence. Global players as well with our presence through the three main digital domain being software, mobile and IoT. Global player finally also because of the number of our customers, which numbers today around tens of millions around the world, and about 94% of our revenue now is done outside France. We built Claranova on two main pillars. Innovation first. We invested this year over 20 million euro of R&D investments with about 200 engineers around the world trying to build the best differentiating products. Second pillar is our economic model, mainly B2C. We invested this year 86 million of digital marketing investment to acquire customer over internet, mainly through a freemium model. And this B2C online freemium model are, I believe, maybe the most resilient business model you can find today, especially, I will say, in this pandemic situation. Because of these two pillars, innovation and economic model, we have been able to grow a company with this year, again, over 400 million euro of revenue. And actually, half of this revenue is today recurrent. And we've been able to achieve now 14 quarter of consecutive growth these past few years, and actually today profitable growth. Here are the main figures for Claranova this year. Again, 409 million euro of revenue. We grew by 56%, including 20% of organic growth. 50% of our revenue, as I mentioned before, is recurrent, 94% international revenue. Our EBITDA this year will be 17.4 million, and we'll tell you more about that later. We significantly grew our cash situation and cash flow from operations at 29 million euro, and we have cash situations at about 83 million. And I'm going to let Jean-Yves give you more details about these numbers.
Many thanks, Pierre. Good evening to everyone. So I'm going to take you through some of these numbers in a bit more details as per the slides. So the full year results for fiscal year 2020 are as such. As Pierre mentioned, so we have, as we've announced already in August, we've recorded about 409 million euros in revenues, growing 56% fiscal year over fiscal year, 20% of which is organic growth, 32% is growth thanks to M&A, the acquisition of the assets of Personal Creations in the US in August of 2019, and plus 4% of currency impact, forex impact positive this year, but these things can change. What's interesting is that what we can see is that we're able to sustain a fairly strong growth rate over several years. We have 46% growth on average over the last 3 fiscal years. So that's a pretty decent, a pretty interesting growth rate in terms of top line. The way we get there is by maintaining significant momentum, both in marketing spend as well as in R&D spend. So it's 68% growth this fiscal year in marketing investment to 86 million. So that's a fairly significant increase over the growth rate of fiscal year 2019. Same is true of the 42% increase in R&D investment in fiscal year 2019 compared to 15% in fiscal year the previous fiscal year. We're actually quite happy to have been able to preserve our operating profit in the current environment, especially during the pandemic. So we've reached 17.4 million euros in EBITDA. And we'll go into some of the details of what goes into that EBITDA and what doesn't later on in this presentation. That is 4%, so that's an EBITDA that corresponds to 4% of revenues in terms of P&L structure. Out in these 17.4 million, we've decided with the board and our auditors not to book $5 million in loans that were granted to us by the US government as part of their payroll protection program, because we believe that we match all of the conditions for these loans to be forgiven, but there are still some uncertainties, some regulatory uncertainties, some legal uncertainties about whether this is really something that's absolutely going to be granted to us by the US government. That's why we've decided not to take it out, not to add it, to the EBITDA, but at the same time have the spend, especially the payroll, the salary payments that we've made to our US employees, for which the US government granted us that loan. So, as I said earlier, the EBITDA, as expressed as a percentage of revenue, is about 4.3%. That's as compared to 6.1% in the previous fiscal year. That deserves a few explanations. The reason for this slight drop is really 3 main items. The first one is personal creations. These assets we acquired in the US in August of 2019 didn't contribute to the EBITDA in their first year as part of the group, as is perhaps self-evident. The second issue, again, is that non-integration, non-booking in the EBITDA of these $5 million in payroll protection program, which we hope are going to be formally forgiven by the US state, the government, in a few months now, as well as the continued refocus of AvaQuest from a business model that relies on sales of perpetual licenses to a more recurring, more software as a service type business model. That's also taking a significant hit on the EBITDA. To sort of go down the P&L and start looking at EBITDA and what goes below the EBITDA. So 17.4 million euros again as EBITDA levels. We've decided, as was already the practice in December when we announced our December result, to take out of the EBITDA the positive impact of IFRS 16. It's the first full year for which we've had IFRS 16 accounting for leasing, etc. So it's a full 3 million that could together with depreciation and amortization, that gives us a 13 million euro EBIT level. 6 million in non-recurring charges, mostly related to the personal creation acquisition again in August. 5 million in interest charges, and to all of this just leading to a positive net result of 1 million euros, 1.2 to be pretty specific. It's also the first profit-making year in terms of net result since 2015. So the company was EBITDA positive for a number of years already. We're happy to report that we're also now net result positive in 2020. Focus now on the cash flows. So strong operating cash flows in this fiscal year, a fourfold increase in particular in a change in working capital requirement. That's a net benefit of our business model where we get the revenue from the customers first, and then all of the costs come in at a later point. So that generates 23 million in extra working capital requirement for our business. Quite a bit of investments, as you can see as well, 33 million euros of cash flow dedicated to investments. Again, mostly acquisitions. The Personal Creation acquisition for $18 million, as well as some delayed payment for the stake we acquired in Solaria about 2 years ago. That leaves us with a closing cash position of 83 million versus 75 last year, so a 10% increase in available cash for the group. It's a significant cash position. If we sort of take a slightly different look at it, if we deduct in particular all of the financial liabilities from this, it's 14 million euros, which is available to the cash as net cash for the group, as compared to 23 million last year. The difference is really all of the investments we've made. Again, these acquisitions we did, Personal Creations again, the delayed payments to the Solaria shareholders in this year as well. But very significant cash position, significant net cash position, and again a pretty significant increase in working capital, decrease in the working capital requirements. Specific point now on IFRS 16. As I said, first fiscal year for which we have to book IFRS 16 for the entire year. Net, it's basically, of course, it's a neutral, no impact on the cash position of the company, very limited impact on the net result of the company, only minus 400,000 euros of impact on the net result, and a very limited 10 million euro impact on the balance sheet. So as far as the P&L is concerned, it's pretty much a wash. It's pretty much neutral, and in terms of balance sheet, it's very limited. Its impact is very limited. These are mostly buildings in the US, so this is really just very few buildings, very few facilities here in Europe, mostly in the US, that we have to account using this new method now of IFRS 16. And I think I'll give you the floor for the business performance, Pierre.
Thank you very much, Jean-Yves. So what I would like to do is just to show you a few slides on our various business units. For Planet Art, this fiscal exercise was yet another strong year of growth for that business. 340 million of revenue, 78% global growth, including about 30% of organic growth. If I have to pick a few events for this fiscal year, I will say we opened a few more countries in Europe for Freeprint. We actually experienced a good ramp up of revenue coming from new solutions like Freeprint tiles and Freeprint cards. We actually even benefit during the confinement period of increased traffic when it comes to Freeprint, mainly in Europe. So even that was a positive event for us. But maybe the most critical item for this year was the acquisition of Personal Creation. So we bought Personal Creation in August 2019 from a US group named FTD, which happened to be in chapter 11. We paid that business $18 million, which I think was a decent price for a business which has been delivering this year about $100 million, 88 million euro of revenue. So I think it was a good acquisition. Obviously, for the very first year, we essentially focused on integrating the team, rationalizing the business. So as Jean-Yves mentioned before, and I think it's pretty understandable, this business didn't really contribute for this first year when it comes to profitability. Our plan clearly is to bring that business at the same level of profitability that we experience with the other, I will say, historical part of the business of Planetat. So again, I think we did a good job this year working through this integration, and we have a lot of expectation and actually a lot of synergy that we still have to gain from that business whenever it comes to product, geographical extension, cross-selling with other brands. So there's still a lot of opportunity for us to grow that business. Beyond the pure opportunity to grow our revenue, there was also a fairly strategic element to the acquisition of that business. And one good example is the launch of a new free print product, which we call Free Print Gifts, which exactly has been focusing on this customized, personalized offering, which, we're just starting that business in the US, and we have quite a lot of expectation for that new line of products. Following the acquisition of Personal Creation, we bought about a month ago Café Presse to Shutterfly. Café Presse is maybe one of the most recognized shopping sites in the US when it comes to personalized products. And we are going to gain a lot as a product line expansion. We are going to gain new countries where we didn't have business yet. And we also are going to acquire a few commercial licenses like Marvel, Game of Thrones, Friends, which we are going to leverage today on Café Presse, potentially tomorrow across the Planetat business. Maybe the most interesting part of this acquisition was what we call a marketplace, which is a community of literally hundreds of thousands of independent designers who are providing content to that Café Presse business. So this is a very interesting concept because this is a way to gain pretty much an infinite amount of content without actually paying for it, because these independent designers will be paid as they sell some of their product. So it's a very interesting concept which enables us to have a very large catalog, and this is certainly something we are going to bring across all the Planetat business. Behind this acquisition, there's actually a new vision that we are trying to push for Planetat, which we call personalized e-commerce. So let me try to explain what that means. Clearly, e-commerce has been one of the main winners, I will say, of the internet deployment over the past 20 years. You can buy today any product around the world, which is most likely built in millions of copies in China, but actually you can have access pretty much to anything. The concept of personalized e-commerce is a capacity to provide to our customer not just a standard product, but a product that could be customized by our customers to pretty much what they want this product to be. And the way we can deliver such a solution today is essentially because of the very interesting evolutions of the production capacity that we've experienced over the past 5 years, where now we have this entity that can really very easily and at a cheap costs produce a very small quantity of solutions, usually as a short-range circuit. And this is really something, this is part of this new capacity that we have built the Planetat over the past 5 years. That capacity to be able to have hundreds of suppliers initially to deploy photos, but really our aim is tomorrow to be able to offer to our customer a very large line of product that they will be able to customize. And we believe that tomorrow that concept of personalized e-commerce is going to gain market share compared to, I will say, the traditional e-commerce solution. Let me tell you a few words on AvantQuest. The growth of that business this year has been, I should say, limited in certain way, 9% growth, and actually we decline when it comes to EBITDA. We used to have a 20% EBITDA business, which are now at 8%. The main reasons of these results are the fact that we transition our business model from a sale of a perpetual license to a yearly subscription, what we usually call a SaaS model. So instead of selling a full license costs, we are going to sell to our customer a yearly subscription, usually at half the price of what we will have sold a perpetual license. And pretty much we're spending the same amount of marketing for acquiring that customer. So mechanically, you have a strong impact on the revenue. And obviously, as we are spending the same amount of money, we have also a strong impact in the EBITDA. Obviously, if we're doing that migration, is essentially to build a much more predictable, much more visible stream of revenue in the year to come, and therefore also a much stronger profitability as this business is going to ramp up with that subscription model. I wanted to give you an example of what we're trying to do on one of our verticals we are focusing, which is the PDF vertical. We have our own product named Soda PDF. To give you an idea, this product grew this year 34% when it comes to revenue. We actually were able this year already to migrate pretty much 90% of revenue to a subscription model. And 90% is about as good as you could be. You only have 10% of all the business, but 90% is really the maximum you can get. So we're certainly more advanced in PDF than we might be in photo or in security product. But actually, we really have been able to achieve that migration pretty much fully with the PDF. And we already are at a 20% profitability level. If you look at the PDF vertical, this is about the 7 billion market. And what is interesting is that this is a market which continue to grow. So over the past 15 years, this business has been growing 20% sustainably. And if you look at the main player, they are able to get about 30% of productivity level, especially when they're completely done with that migration in yearly subscription. Obviously, Adobe is the main leader of that market today. You have then 3 players in between 20 million and 50 million dollars of revenue. You have Foxit, Nitro, and Soda. So we are currently today the 4th players in the world when it comes to PDF. And clearly, our plan with that vertical is to grow and overachieve the growth of the business. Which is pretty much able to sustain 25-30% growth every year. We pretty much, again, down when it comes to subscription model with 90% of completion. And the idea is really to try to reach this 30% level of profitability like the big players do today. And really, this is the same strategy we're trying to achieve on all the vertical we are focusing on with AvantQuest. So photo and security, like PDF, are verticals usually growing also by over 20%. And again, in these verticals, the most efficient players will deliver about 30% of profitability. So really, our aim is to get to this level. We have been investing a lot of in R&D money to be able to build new solutions for these 3 verticals. And again, our plan will be able to sustain a over 20% growth and to have pretty much all subscription model sales, and therefore trying to reach 30% profitability within the next few years for all these vertical. I wanted to, before ending this presentation, say a few words on my device. So we have been essentially focusing this year with my device on growing our customer base. At the end of this fiscal year, we had about 500 customers signed with my device, deploying our solution. We have about 5,000 different deployments currently in progress with our solution. And clearly, the level of revenue of my device is obviously not as strong as we have with Claranova, PlanetArt, and AvantQuest, but we are still very confident that this is going to be a very strong relay of growth for Claranova in the year to come. Before we can actually take your questions, we have just a last conclusion slide. Again, this has been certainly a very challenging time with that pandemic situations all over the world, with a very strong economic impact for a lot of companies. I will say that for us, it has been a fairly good year, and I think we've been able to show our capacity and our resilience, even in a very difficult environment. So our expectation today is still to achieve what we announced to market about a year ago, to reach around 700 million euro with 10% of profitability by 2023. Thank you for your attention, and I think we'll be happy to try to answer your question now.